Welcome into another Tax Talker. Wednesday, October 15th is the individual extension deadline. So in recognition of that, we're going to talk all things extension. Why do people extend? Is it bad to extend? What does it even mean? Can there be benefits to extending? We'll talk about that and cover some common misconceptions. Let's get into it. First of all, what is an extension? You can really actually file an extension for any of the major income tax returns, your partnerships, your S-corps, your corporate returns, your trust and estate returns, and of course, the individual tax return that's due April 15th can be extended to October 15th, an automatic 6-month extension. This is an extension of time to file your tax return. It is not an extension of time to pay taxes due. And that's a key thing to get straight. Remember, the tax return itself is just a reconciliation process. It's a form that aggregates all your income, assesses liability on it, and then it aggregates also everything you've paid in, and then the difference between these is either going to be a balance due or a refund. As we talked about before, there's rules about safe harbor, meaning how much you have to have paid in throughout the year, and then everything else is due April 15th. Regardless of whether you extend your return or not. So if you want to file an extension, you just simply file a one-page form 4868, and that's an automatic extension to file. Some states have an additional form that you have to file with them, or others say if you filed federally, then you're covered for the state. Now you can file an extension, and if you don't have the money, it's still good to file the extension because come October, whenever you do file your return, you will owe interest and penalties on your failure to pay by April 15th, but you will not be assessed a failure to file penalty because you filed an extension and then filed your return, still a timely filed return. So this is kind of beyond the scope of the video, all the different penalties that can apply, but it is still significant that even if you can't pay by April 15th, you should still file an extension to avoid those failure to file penalties. Think of the extension as an extension of time to do the paperwork, and that paperwork is important. Different penalties apply if you miss filing deadlines, regardless of the timing on when you've paid. So that is important. But the bottom line is everyone is entitled to a 6-month extension if they want it. So why would anyone extend? Doesn't that just delay their refund? Well, yeah, if you are waiting on a big refund, then you are not going to get it if you extend your return. That is true. There can be many reasons to extend a tax return. The first is it's just simply out of your control. There's many situations where a taxpayer is waiting on a form that they need for their tax return that they don't have, and they don't have any control over getting it sooner. For instance, they could be the beneficiary of an estate or a trust they're waiting on a K-1, and the K-1's not ready by April 15th. Or very commonly, if you're a passive investor in a big partnership, those are very complicated tax returns, and the partnership can file an extension to extend their return from March 15th to September 15th, and you're not going to get the K-1 that's needed for your personal return until that partnership tax return is filed. So there's all sorts of situations like this where you just don't have the information needed, and it's just outside of your control. Secondly, though, there are plenty of situations where the taxpayer is making some sort of choice here. Basically, because of the complications in their return or finalizing their accounting records, they're deciding that they can't have their records ready in time to get a tax return filed by April 15th. Remember, they could have a small business that's filing their own partnership or an S-corp tax return that's due March 15th. So now you're talking about having all the information needed for that to get that filed by March 15th. That creates quite the bottleneck, and in many cases, for whatever reason, because of that, or maybe they need to file in a bunch of states, they have a bunch of rental properties, there could be all kinds of complexity to their return. I would say there is also a third category of taxpayer that just extends because they don't want to deal with it, they're putting it off. They procrastinate a lot of different things, and taxes is just one of those, like going to the dentist. For those taxpayers, an extension really isn't a good thing because they're just kind of pushing off what they're already doing a poor job of planning for. But that is the reality of a significant number of extension filers. So does that make it bad to extend? No, and this gets into a common misconception. There could be practical reasons why it's bad for a certain taxpayer to file an extension, like they are waiting for a really big refund, or they're already really disorganized, that's not going to help them to just push this off. But there's no objective reason that it's bad to extend. It does not increase your chances of an IRS audit. That's a very common misconception that somehow it creates a red flag if they've extended their return. There's zero evidence of that. Every CPA firm I've worked at, the owners have extended the business and personal returns for the firm because there's just not much downside, and why not do that at a less stressful time of the year? The other red flag for extending is if you think that's an extension of time to pay, but as we already covered, not related. You should still pay your taxes by April. So again, there can be taxpayer situation specific reasons why an extension's not a good idea, but there's not an objective, this is going to make them audited by the IRS, or they're going to face some big penalty, or their tax return is going to get scrutinized more. None of those are true or have any credence to them. Finally, there can be some benefits to filing an extension. For one, there is a technical benefit in that if you have an extension on file, you actually have the ability to file a superseded return up until the extension deadline. This means you can file a tax return, say May 1st, and you realize, actually I was wrong on that return, and then you file a subsequent return, a superseding return, on August 1st. That takes the place of that previous filed return. It's not an amended return. And there's kind of important technical reasons why that'd be better. But to put it pretty simply, it definitely eases the compliance burden. It's easier to file a superseded return than an amended return. The other reason is statute of limitations. If you have an extension on file, you have 3 years to go back and file an amended return. So you have either, if you don't have an extension, then you just have 3 years from April 15th, as opposed to 3 years from October 15th. So it'd be unusual, but there are big firms now that, especially on their business returns, they will say we are automatically filing an extension because we want those abilities to file superseded returns, or we want those ability to amend. We want that extra 6 months. Following pandemic and all kinds of tax law changes that have come out, there are all kinds of tax years where it has been helpful to have that leeway. So I'd say those are some of the more technical, though very practical reasons to extend. There are also taxpayer-specific reasons, but for one, it does allow more time for planning. A savvy business owner, especially a business owner with a lot of cash flow issues, well, having a good 7-8 months to see, hey, how's my 2025 going? And that can inform final decisions on what accelerated depreciation I want to pick up, say, in 2024, because you haven't filed the returns yet. So that can be a helpful planning opportunity. Similarly, some of the retirement funds, like a self-employed person, they can contribute to a SEP IRA, which have high contribution amounts that you can put into them, and you could have that accrued deduction for the 2024 tax year, but not actually put the money into the SEP until the extended due date of the tax return. So again, it's a powerful time. You're taking a 2024 deduction, but then not actually moving the cash for 7-8 more months. The other reason is just a accuracy, both from a taxpayer perspective, but also the more complicated the return, the more likely you're working with some sort of professional firm to get your tax return done. And they're going to have internal deadlines on when you need to have your stuff in, especially a well-run firm will make that clear. So a taxpayer might look at that and say, no, I don't want to be in by their deadline, and I will be comfortable being extended. Now, I want to be careful here, because just because your CPA firm tells you we are going to extend your return, that can mean a lot of different things. Some of the best firms out there are giving their clients a lot of notice, and they're saying, hey, if you have your stuff in by this deadline, we can get your tax returns done by, your business returns done by March 15th, your personal taxes done by April 15th. If not, then your deadline will be X, it'll be outside of tax season. Firms are being really proactive in helping educate taxpayers on what their options are and finding a good solution. On the other hand, a firm can come tell you, hey, we're extending your return, or we need to extend your return, and that can be a sign that they don't have their stuff together. Many traditional firms, their solution to a big bottleneck of needing to get a lot of returns done is just working 70, 80-hour weeks in March and April. And that's a good recipe to burn out employees. And public accounting, especially in tax, has had a lot of pipeline shortages, a hard time attracting young people to the profession. But it's also a great recipe for mistakes and costly errors as you're preparing returns. All that to say, it can be a savvy move to extend your return. It gives you time and should give you some sort of cost savings on preparing your return. It gives you better planning opportunities, reduces the chance of error. But in order to do that well, it does require a proactive firm that's working with you throughout the year, that's not just extending you because they don't know anything about where you're at for the year. They haven't even looked at your tax docs. That's not a good form of extension. But that is the Tax Talker for today. Extension, it's not a bad word. In many cases, it's a good route to go. It's very taxpayer specific, and you want to make sure you have the necessary planning done to do that well. If you found this content helpful, hit that like button, hit that subscribe button, drop me a comment. I'd love to do a video on a viewer question, and we'll see you next time.